Guys, welcome back to the channel. Welcome back to a new video. Today we are only going to look at Bitcoin. We're really going to zoom in and we're going to talk about how to make money in sideways boring markets. If you like the content, then please do me a favor, like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment or share this video with your friends if you think that's useful. And without further ado, let's start diving in. But first, before we are really diving into the charts, there's one more thing I want to say. Because of yesterday's video, I said in yesterday's video, well, Bitcoin is looking weak. We are not really seeing a lot of movements. It could be a little bit lagging, but in the last 2-3 weeks, we've seen a lot of sideways action. And then when I compare it to the S&P, for example, then we're just seeing a lot of weakness. A great example is yesterday. Here you can see the results from yesterday trading. Dow Jones up a bit more than 1%, say for the S&P, Nasdaq shy of 1% up. Bitcoin went down for the day, and usually we're moving very much together with the S&P and contra on the dollar index. So that just also shows to me, maybe there's a little bit of a decoupling, but also there's just a lot of weakness in the market. New buyers are not snapping in. We had already, of course, major selling. That's why we're at the current price level. But also there's just not a lot of people who want to pick up Bitcoin right now. So we're right in the middle. Another one more important thing that I want to give you as a takeaway is that we have a lot of numbers also coming out today in the rest of the week and next week because of earnings of Q3. So keep that in mind. That might cause for some volatility. S&P, we're not going to talk about it very much because it's just up yesterday a little bit. Looking at its golden pocket, same as yesterday. Not so much movement. Dollar index bit sideways. With that being said, we are going now really to Bitcoin. Like I said, I really want to zoom in because this is kind of where we have been looking at in the last few days or weeks, I need to say. And the whole price range or price movement from the last couple of days, 2 weeks, has not been a lot, approximately 4%. How can you make money in such a sideways market? Well, important is to first kind of zoom out and determine your environment. So if we do that here first on the daily, then we can say, okay, we crashed down to 17k, and then this is your kind of very big range, right? That is where you are in right now, and then you could kind of separate it in smaller ranges. That is also what we have been doing many times in the videos, where we are saying, okay, we are now in a certain trading range and we are going to look at that area, that range, how can we make a trade. And that's also where we always put live then the volume profiles, just like we have the one right here. Zooming back in on the hourly, again, here's the volume profile. We're having a low, so that's the value area low, the value area high, and we have our point of control. And I always like to mix up a little bit because we do see a lot of times that these kind of trading patterns do play out. And right now we have this ascending triangle, shall we say. These trading patterns are not like rocket science. As you can see, sometimes the candle is a little bit underneath, sometimes it closes with the body, sometimes with the candle itself. So they're not really perfect, especially on higher time frames. On lower time frames, sometimes they're a little bit more accurate, but at least they can kind of give a direction, and they give us some support and resistance levels. And then you right away, together with the volume profile, already have a bit of a trading setup to say, okay, you know what, if the price is in this small trading range and moving down, we could say that we're maybe getting a little bit oversold and we might go up again. And that's exactly what happened here on last Friday. Hit the very low and then we went back up again. Here we once crashed down. This was on the CPI numbers, if I'm not mistaken, and then we just went up. There was a gigantic short squeeze and we went below the value area low, point of control, value area high, overbought, right away back, point of control was support, and then back up. So there you can see that actually works very well. And then combine that with the stuff that you hear on the channel, like I said, the liquidity here above the tops and the lows. Sometimes we mix and mingle a little bit. It already gives you a bit of a nicer trading setup. SFPs, I'm also giving you this, of course, always on the channel. But this smaller trading range where we are looking at right now, there are a few trades that I'm hoping to take, or that I definitely will take if they play out. Well, we have a low here, that is here at 18,160-ish. And then we're having a high here, and once we have a significant low or a significant high, I'm always using the fib retracement, because fib retracement works so well for crypto and for Bitcoin. so therefore I'm always using this. And there you can also see that this dump down was not only to value area low right here, but it was also kind of at the point of control, and then we went higher up. So we could say, you know what, we had a dump, we had a top, it took quite some time, but we hit the golden pocket and then we went further up. You can also do the exact same on a much smaller level. You can just say, you know what, therefore I'm now pulling the fib right here, and this is then the top. Let me get the traders reality indicator out. And then we're saying, hey, you know what, we're having a top and a bottom again. Do we have a point of control, a golden pocket? Yes, we have, and look at that, it's also very close to that point of control. So then I always like to say, you know what, that is just a area of interest for me. If you don't want to trade until the exact dollar, then you can just say, okay, you know what, this area right here is the golden pocket and the point of control, and we already know for a long time it's not only the local point of control but also the very macro point of control, which is now in the exact same level. So that is very nice. So we could very much expect a reaction once we are getting into that area. And just because we go towards an area doesn't mean right away, oh okay, then I'm taking a trade, we're going to 100k, yippee-ki-yay. That's not how it works. Then you want to see your confirmations. So for example, when you see volume dying out when you're going lower, so that's on this side, that actually would be nice. That means that the selling is getting exhausted. But also actually what would be nice is, for example, you see something like this, then you're having a bullish divergence, and let's say you have that on the hourly. That actually would be very nice. You need to draw a little bit like this. That is then very much a trade that you can take to trade to the upside. That is in your confirmation. If you can also have the money flow coming up and a VWAP, that is very nice. But of course you can also just zoom in a little bit, and then you can also say, you know what, we're doing this on an even smaller scale, although already the training range here is not so very big. So say, you know what, I'm just taking these lows and highs, and then we also touch exactly the golden pocket right here on this very small range. And yes, this is a very small range because we're talking about not even 1%, so it's very tiny, but still you could take those trades. To be honest, I didn't do it. I didn't take any trades in this area right here because it's not enough confluence. But to be honest, yes, there was a bit of a confirmation even on this very small range, where you could say, you know what, the price is here going lower-ish. If you take the wicks, then it's not really completely, but then the momentum wave here is going up, so therefore you have a bullish divergence. I think actually it was nicer maybe on the 12 minute. Yeah, then actually if you then take this right here until the candle, so really candle to candle, the price goes lower, and then from the momentum wave to momentum wave, that goes higher. So that actually then looks quite nice. Wait, let me draw this correctly. So it's like this. So that actually looks quite nice, but there you just see, because there's no volume, that there is just barely any power into this move. And also right now, because we are just in this range already for a long time, and I said it in yesterday's video, that concerns me a little bit for the bull side. A lot of people are saying, yeah, short squeeze is incoming. I don't know, to be honest. I am getting a little bit more cautious and more bearish by the day. I hope that we're going higher just so I can short it again, because I'm still staying strongly to my bias. That 17.6 right here, this yellow line, needs to be taken out sooner or later. And of course you want to do it as high as possible level, because then you have the most profit. But you can also see that from this moment on, that we're having a high, lower high, lower high, lower high. That is just looking pretty ugly. That makes me believe that it's getting harder and harder to get back up, to grab the liquidity that we already talked about so many times, from this high, this high, and this high, to grab the liquidity and then go higher. Of course, lower. Of course, it can still happen, but the more time we spend there, the more bearish I get. Sometimes what I also do is to kind of determine where we are. If you're only just really using classical pattern trading, so that what we are having right here, that we said, okay, we have a support line, resistance line, a support line. This is a rising triangle or ascending triangle. If we have then more touch points at the bottom, like we have right now, that just shows that there is a lot of selling pressure, and that we're spending a lot of time here on the support line. The support is still support, of course, but us then to break lower is probably more likely. And the other way around would be, of course, then exactly the same, but then the other way around. So let's say we have touch points, one time down, touch point, down, touch point, then eventually we're breaking out. This for me then also would make a lot of sense as it's much more bullish, because we're just retesting and retesting a certain level, and the more you're retesting it, the weaker it gets. So of course here this is ascending, so yes, the price is of course every time a little bit different, because we're going higher up, but you get kind of the idea. So the more time we spend here at the bottom, the more weaker it gets, the more bearish I get, and the more time we are testing or spending at the top, the more bullish it is. So therefore I am slowly changing my bias to say, I don't know, that golden pocket 21k is very nice in its textbook, but we might need to accept that we slowly are not reaching it anymore from this moment on. That is approximately 9 to 10%. Actually would be very nice, but I don't know. Anyways, back to the micros. So if you are then want to trade those very smaller ranges, then I always like to use the 5 minute, 6, 10, 12 minute, 15 minute, sometimes 24 or 30 minute, and that's kind of it really for the smaller ranges. And the most ideal would be if you have something like this, where you say, okay, you know what, I'm making a very small range that, like I said, if you then come to your level, that even on those smaller time frames, you then have a bullish or a bearish divergence depending on your long and your short. You could also use coinanalyze.com. I will use it in a different video where you use CBD and open interest to get more confirmations on your trade. Also on these smaller time frames, I sometimes like to play around a little bit with support and resistance lines, and then you could say, oh, actually we were just making a triangle-ish kind of pattern. Then we already also had some retesting and some breakouts or fakeouts, but that is then something you could look at, or you could say, you know what, actually I think it's a bit more like this, and then we still maybe have some room to go. What is actually was nice to see that also if you use this kind of pattern, then you also have of course enough confluence at certain levels. For example, you can also just of course pull the fib from the bottom to the top, and then you said, okay, if we're going back up, is there a golden pocket? Yes, there is, on 19,500. And if I'm looking at this high to this low, and I put it on, let's say here approximately where we're breaking out, then you see that's also exactly to that golden pocket. So that is also a very nice confluence, that if we will break higher, go to the golden pocket, grab the liquidity, and then go lower. And with grab the liquidity on this specific range, I mean like the R stop losses at these highs. If you always have like a sloping price, it's a sloping price action where you just have the highs are just constantly a little bit lower, a little bit lower, a little bit lower. It is very juicy to take that out, to take all those stops out, and then turn around at a certain point. Let me go a little bit back in the chart, and there you can see exactly the same happened. That was this one right here. I didn't trade it, but this was actually also textbook. A high. Look at this, that is constantly just a little bit higher, sorry, a little bit lower, and then eventually you're going up and you're taking the liquidity, and this high is actually kind of until here is. So you can see that you took out quite some liquidity here. A lot of stops were triggered for people who went short, and then of course put the stop loss just above the top candle, and that's all been taken out, and then we were dumping down. So there you can see a little bit then how price action works. Here the same could also happen, and therefore if we then hit that golden pocket right here, we also again have a lower high, again confirming that bearish sentiment. And then if we are then going lower again, then I am expecting this golden pocket to see some kind of reaction. Something that I'm also using on the lower time frames on the day-to-day trading is the VWAP. The VWAP is used a lot by day traders as support and resistance, and a lot of times you can see that during the trading day if we move away from the VWAP and we come back to it, that it acts as support or resistance. Now this one is not such a nice example because we have been dipping around that VWAP a lot of times. That is especially, you see, when you have a lot of sideways action, a low volatility. But let's go, for example, here. This was then last week, and you can just see that once you really dip below, and I think this was starting from the European session, below it, here it was resistance, here was a bit of support and resistance, and again below, tap it, again below, tap it, again below, and then you can just see there was just constantly a fight with that VWAP. Doesn't always say that once we're below or above we cannot flip it anymore, absolutely not, but it does show you that it is actually very nice support and resistance here. Tapped it, tapped it, tapped it, and you can see it stay very much above. So that is super nice. Talking about trading small ranges, I know people who even trade during the weekend. So if we take market Cipher SR out, so the VWAP, then you can see that this price action right here, this was the weekend, and even in this very small price range, you still have a range. So I usually do not trade during a Saturday, sometimes during a Sunday, but you can see that even here you can just pull a range volume profile, and there you can say, okay, this was the point of control and the value area high close to each other, and you can see exactly where the price bounce off from those levels. This is on the 15-minute. Let me zoom in here, and you can see that even here done on the volume profile, look at these perfect bounces here of the value area low. Of course, this was a dip below, and then went higher again here, 2 times the point of control, very nicely. So it is definitely tradable, although it's a very tight trading range. We're talking about 0.5%. So yeah, what you then usually see is that people using a very high leverage to make this worth it. I usually like to stay away a little bit from very high leverage, as in 50x, 70x, 100x. I'm not touching it, but it is of course possible. And the other downside of trading during the weekend is that you need to have patience before the price really hits your level, or hits a good price level to take profit, because the price just moves much slower because the traditional markets are closed. Alright, so I hope that this was useful. Like I said, now we're really zooming in into a day-to-day price action and what I'm kind of looking out for, and how you can find confluences. I can talk about this for hours and hours to come. We can use still so many indicators to determine if we need to take a trade or not. If you like that kind of content, then please do me a favor, like and subscribe, and just leave me in the comments what you guys want to see. If you want me to dive deeper into the price action, and like I said, trades, support and resistance, indicators, what triggers me during the day to take trades or not, please let me know in the comments. And of course also feel free to share the video with anyone if you think that's useful. Follow me on Twitter and Instagram. Those links are also in the descriptions. Thank you guys so much for watching. See you in the next one. Bye bye.